Let's get into conversation with Jaiprakash Toshniwal, the fund manager, equity, LIC mutual fund, asset management. And Mr. Toshniwal, hi, thanks for your time today. Give us a quick run through of what you are making. What's your first sense right off the bat of these AMFI numbers that we're seeing today? Because as my colleague Sharad was pointing out, sectorally, we have seen flows that are down 59% and small cap fund inflows are also around 23% month on month. What picture is this giving you of what the sentiment is right now?
Good afternoon. Thank you for having me here. So yes, as Sharad mentioned, if you see on a month-on-month basis, there is an outflow, and I mean, there's a lower inflows in the large cap segment. But even if you see on a large cap side, large cap is generally receiving around 2,200 crore kind of inflows. But in small cap, we have seen, I think, around 4,000 crore kind of inflows. Uh, I would say this is a one. There are two, 3 points to highlight. One is that the continuous flow is reflects the earning strength of the people in the economy, the kind of savings which we are seeing and which is getting flown into the market. Also, we have seen continued interest in across the participation from the equity side. While we have seen the equity market, the cash flow loop on the retail side is going down, but there is a reasonable amount of flows coming from the mutual fund side. So basically, the investment is getting more institutionalized, at least on the retail side that we can see. In terms of flows, again, Shahid also pointed out this flexi cap is still seeing a reasonable amount of flow. I think almost last month it was around 7,500 crore. This month is also around 4,000 crore kind of number. So this reasonable flow, I should say, and decent growth on a longer tenure basis. I should continue to maintain that. Yeah.
Indeed, but Mr. Toshniwal, help us understand that what are you making of the outlook with respect to the SIP numbers, because of late a lot's been happening in the markets in terms of the triggers. The markets are getting excited. But do you believe that though we have sustained above that 28,000 crore mark, we are likely to build on to this number in the upcoming months?
When we're focusing on 28,000 crore number for this month, we also, if you look at the data on a 6-month, 7-month basis, and we particularly focus on the number of SIPs getting into and what the number of getting closed. So if you notice somewhere around Jan to March, there were negative flows in negative, which means discontinuation were more than the new additions. That trend has reversed and that trend has continued to go up. I don't have this month's data point as such, but even if you see last month data point also, we had continued increase in terms of the new SIP role or new SIP enrollment which is coming. And the last which I checked, the SIP AUM was almost 15 trillion number. So that way the things are on track, and this kind of excitement in terms of that, while we are seeing a nominal GDP growth slowing down, let's say in 8.5 to 9% kind of level, but even if the numbers are stable going, which simply means that even the income level are also reasonably stable, and we are not seeing much of the concerns at least out there.
Prakash, what I read is that while large cap fund flows as well as mid caps have risen 33%, both categories on a month-on-month basis, but what's actually seen outflows are sectoral funds, and small cap inflows as well have seen a dip down of about 23%. Is that really telling you about some uncertainty in the market right now with regards to of course, what sectors are going to do well and what's going to happen to the small cap end of the market?
So the data which we are pointing out is predominantly on the cap basis. So to say, the large caps have, as you mentioned, the large caps have not shown inflows. But even in a thematic and sector inflows, which have seen dip, is predominantly because last month there were a lot of thematic fund NFOs, almost 7,000 crore of additional flow which came. So if you're on an average out basis, almost 2,500 crore to 3,000 crore kind of number, which I can recall. So that way, I'm not seeing much worried of such. Having said that, if we come back, well, market is a function of earnings. What we are seeing in terms of in this quarter also, we have seen a reasonable amount of performance on the earnings side, and especially the earnings was much sharper, much good, I should say, in the mid cap side compared to the large cap and small cap side. As a category, that's what I'm saying. So what we are trying to say, we tend to see market or tend to see across cap, it's predominantly based on the earning growth per se. And wherever we as an investment, we see that earning growth is slowing down at a 10% kind of level, we need to find, we are looking for ideas, we look into segments where earning can go between 12 to 15% in the near term.
Okay, Jaiprakash, great to have you on the show. Thanks for your time today with that quick take on the AMFI numbers. But yes, it's heartening to see that equity inflows, while they have fallen on a net basis after a record high inflow that one saw in July, but they're staying above the 34,000 crore rupee mark. And the subdued numbers were perhaps because of lesser NFO launches as well, and that's the category which has seen a dip. But having said that, if you look at the SIP data, large cap fund inflows, they've seen an uptick of 33%, sectoral fund inflows, while they are down 59%, mid cap inflows as well have risen on a 3% on a month-on-month basis. And flexi-cap fund inflows, they remain pretty strong for a second consecutive month. But Kunal, is that the reading or the pattern in the market as well? Are large caps right now looking the safest bet as opposed to small and mid caps?
Well, it's difficult to say, Aisha, because large caps are the ones which are actually at the brunt of the sharp selling in the last, I think, 10, 11 weeks when the markets were going through a sharp correction. So I think in that context, we need to see how the FIs do balance their positions, whether it's a comeback of large cap stocks or whether it's those individual themes which could probably attract the global investors. So I think that could be something to watch out for. We also look out for the coherent patterns. So for example, the likes of L&T, Reliance Industries, HDFC Bank, these are the top three names which have still not participated in the same gusto with the markets have done over the last 2 or 3 days, where the Nifty is now inched back to that 25,000 mark. So I think that zing is missing for many of those large cap names. We'll need to see that element of short covering coming back into these selected large cap names. I think once we start to see that, then we can be of much more higher tilt, that the large caps could make a very strong as well as a durable comeback.
So Neil, that's the thing, right? Like what Kunal was just highlighting, that some of the large cap heavyweight names are still not participating. And I mean, let's pick up the case on Reliance, for instance. Positive announcements coming in from the AGM, still the stock hasn't budged a whole lot and still snapping in a range. And up until the time that you don't have these high weightage names actually contribute, the index as well will not move.
No, I think that's a very nice point. And I would just stress here, adding to Kunal's point, like you said, Reliance, let's look at a few of the affiliates. The point is that the domestic fund managers in each scheme are limited to 10% of the scheme for a single stock weight. And my thing is that if you take a read across the large cap funds and the flexi cap funds, most of the fund houses are already at 9% levels. So their ability to add on these heavyweights is very limited. So when you want a heavyweight to rally, it is those who are not constrained by SEBI regulations. And these are retail and HNI investors, maybe insurance and the FIIs. So that's the reason these heavyweights, because, from that point of view, domestic fund managers can't add of these stocks, even if they are looking good, they're already sitting on them. So it's a very tactical thing there. There's nothing wrong with the way these stocks are perceived. Of course, FIIs broadly, if you look at it, the passive flows account for a significant proportion, and passives buy all the index heavyweights. So when FII flows are coming down, naturally index heavyweights flows are also coming down. So it's a simple, very easy to understand this. And for that very reason, I'm saying if we are going to look at the fact that the tariff scene is going to get better, not worse, if you're going to look at the fact that the domestic economy with the festival season is going to get better, not worse, then definitely I would say that somewhere FIS flows, when they turn around, it is these heavyweights which will get. So that's why to say that today, because of the impact the large caps have had over the past few months, like Kunal was saying, it's today a safer place to play in, because a lot of the mid-cap names, especially consumption-driven, have seen a very strong rally post the 15th August announcement and then the signing of the GST Council. So there's a lot of rally that already happened there. So you're likely to see some profit taking there, and then it'll probably get into what is called as the safer space, which you call the large cap. So I agree with Kunal's assessment, and that's where the flows of this month, I was seeing all the discussion around it, and they reflect the maturity of the distributors and the investors, that you see in this volatile period, they have actually increased allocation to large caps. They brought it down to small caps, and they brought it down from sectoral funds. So indicates the maturity of the investor stroke distributor also. And second, for last month's flows, if I may just pitch in there, you're saying that, oh, there's a huge drop, but you take it two things into account. One is that if the previous months, 2-3 months, was only around 25,000 crores, last month it spiked to 42 because the sectoral NFOs spike. So if you take off those impact, it's actually much better than the run rate. Second is last month was a holiday heavy month. There was Independence Day holiday and the Ganesh Chaturthi holiday. So because of that, the number of days that is there was also less. So I'm not at all worried about the flows. I think they reflect a very strong, maturing and supportive domestic investor. But that's where I want to say that since the flows are mostly in mid and small cap, you can't ignore mid and small cap stocks or sectors at this point in time. So it's better to have a balanced approach across large, mid, and small. Large cap because of the FII return anticipated, and mid and small cap because domestic buying is going to be concentrated around that. And the impact of the GST cut is also going to be largely felt in the mid and small caps. Apart from FMCG, which is a reasonable weight in large cap, your discretionary consumption, realty, all the rest of the pack which will get a benefit from the GST cut are largely in the mid and small cap space. So keep a balanced approach to portfolio allocation across large, mid, and small. And that's where multi-cap funds as a category, I would say, sound the best because they have to allocate 25% each to large, mid, and small.
Coming in on the allocation front, but just a few minutes left before we shut shop. And apart from IT, one such sector that is doing well, and Kunal, I wanted to have your take on that. That is the defense pack. Look at the move in BEL, Muscat Dock, HAL. They're any which ways flying higher by 2 to 3%. No such big news flow out there, but technically, are the stocks showing some sign of interest coming back?
Yeah, I think so. It started off with the short covering for names like BEL as well as I think Bharat Dynamics, and then I think now we could be looking at these stocks starting to show signs of trends. What could also happen is what's actually happening is that many of these stocks have shown signs of indicator breakout on their daily charts so far. Now this could be a first preemptive indicator that the stocks which are coming out of almost like a 8 to 10 weeks of a consistent price downtrend, and I would expect that if this in case is a major turnaround, then we could be looking at least another 2 to 3 weeks of a consistent upside for many of this defense packs. So it looks to be a very attractive space at current levels.
Okay, on that note, let's begin winding up for the day. And Sunil, good to have you on the show. Kunal, thanks as always.